Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Garrett Goggin, editor of Stansberry Research, Silver Stock Analyst. Garrett, great to see you today.
Hey, nice to see you, Ivan. Nice to see you, Jim. I'm excited to meet up with a couple other silver bugs. You guys have done a great job at Wall Street Silver.
Well, we appreciate your time. Thank you, Garrett. So, Garrett, retail supply is getting very tight for silver, and now First Majestic and Endeavor are withholding silver from the market. So, how significant is this?
Yeah, I follow First Majestic. I follow the mining companies. I've been a mining analyst for 10 years. I've been following First Majestic for 10 years. I know Keith, I know Todd, the IR guy. And, Keith has made a lot of wise, shrewd decisions for shareholders. He creates shareholder value. He's withheld silver a couple times in the past. Because actually, he used to be a trader back in, back 20, 30 years ago in Vancouver. So, that's his background. And there's certain times when he feels the price of silver is way too low, where he withholds silver from the market. And then he waits till the silver price rebounds and then he sells it. Easier said than done, but he has a, good track record of doing this in putting an extra million, couple mil, 3 mil, 5 mil in the bag for shareholders.
Yeah. And Bradford Cook is doing, and Dan Dixon are doing the same thing for Endeavor. Yep. They've been doing that for several quarters. I think they did it in the second and third quarter for Endeavor Silver. And then Keith just did it this most recent in the third quarter.
Yeah.
So I think Endeavor was 1 million ounces and or something like that. And how much did Keith do, Garrett? Was it like
a couple mil?
1.4 million, something like that?
Yeah. But I tell you that the root of this issue is that, they feel the COMEX price is too low. And what happens is the silver miners will sell all their metal to these refiners. These refiners have relationships with all the banks. The banks, then the refiners get the silver, then the banks credit First Majestic, they credit Endeavor with, dollars for their silver. So the banks are financing the whole silver industry. And, you can understand why, because, there's a lot of other things that banks do. They do equity deals, they'll do debt deals. So these miners are basically obligated to sell to the banking institutions that make the silver market. But unfortunately, on the other side of that equation is you get these banks involved in the COMEX, the structure of the COMEX pricing. What Keith has been saying recently is that it'd be nice if there was an alternative to selling it to the banks. And then what I was, looking at the other day, me personally, if you look at some of the crypto products out there, there's PaxG, which is a crypto gold product. You can own PaxG, right? And then there's all like these DeFi lenders like Celsius. You can take your PaxG tokens, deposit them at Celsius and get a 5% yield. So if you get one of these crypto products that gets to a significant mass, then, why can't the industry sell their silver and sell their gold to these sort of, decentralized, crypto organization? That'd be a home run, but, they need, it's a lot of money. The silver miners are selling their silver and it's, hundreds of millions of dollars that you're going to need in liquidity.
Well, Kinesis does something the same. You can literally mint your silver or gold into the Kinesis system, and they will then get their equivalent gold and silver tokens that are then exchangeable into US dollars or Bitcoin, Ethereum. Kinesis has that whole platform set up also, which a lot of our members are set up on.
Is there a yield on that product?
Yeah, there's a holder's yield, there's a minter's yield, there's a, literally they just paid it out for the first time.
Yeah.
I think that I own 1 KVT, and the yield on that is going to be something like 6% a year.
Really? All right.
So I don't know what the yield is on the holder's yield. We're about to interview Tom Coughlin, the CEO of Kinesis, because they just paid the first holder's yield, just people who are just, it's parked sitting there in your account.
Yeah.
And I think their deal is if you have 200 ounces of silver, you can take physical delivery.
Anywhere in the world.
Yeah, anywhere in the world.
Because I tell you what, I've owned gold, I've owned silver physically. And silver, it's bulky, man. You put some dollars in it, just 10 grand, 20 grand, 30 grand. It's like, what am I going to do with it? It's like it takes up a significant portion of,
When I dumped all my silver in the lake behind my house, the level of the lake rose by like 2 inches.
Yeah.
So it's, yeah, I agree. By volume, it's very bulky.
And then like you decide you want to sell it at a certain point, you know, you got to pack it up. You throw your back out. You got to go haggle with the local coin dealer and get screwed over, you know, the pricing and stuff like that.
I don't know. I've never sold silver. I have no idea how that works.
Onto it. Yeah. But yeah, crypto product would solve that, you know, because it'd be boom, you know, it'd be digital.
Yeah. So, hey, so you're a stock analyst. Let's talk about some stocks. I just saw you tweeted this. Let me share this. You know, a lot of people, you know, even though these companies have the name silver, this is a graph you just put out on Twitter. So I assume it's fair game to use today. So a lot of these companies, even though they have silver in the name of their company, they're not necessarily silver dominant by revenue. And I think one of the classic examples is, you know, down here, Pan American Silver. You know, everyone thinks it's a huge silver company, but only 28% of their revenue comes from silver revenue. It's mostly a gold company now, isn't it?
Yeah, absolutely. You know, it's because of the low margins. The silver margin, the average all-in sustaining cost for the industry is $16.52. You can actually see that in the green down at the bottom of that all-in sustaining cost column. And then the price of silver right now is $23.09. So, you know, the margins are slim versus gold. Gold margins are usually like double or triple what silver margins are. So due to the price of silver being low over the past few years, a lot of silver miners have gone after gold projects because they're more profitable and easier to manage. Like First Majestic years ago was managing 6 silver projects, all generating, you know, minimal amounts of free cash flow. They were all doing 1 million, 2 million ounces a year, all in total, whatever, like maybe 10 or 12 million ounces. But they were going from slightly profitable to losing money, slightly profitable to losing money. So, you know, First Majestic made a shift and they acquired Silvercrest Mining for Santa Elena. Santa Elena silver gold, so the margins are higher, and they're making more money, more free cash flow. And then they bought Primero, they bought San Dimas, which is a really high grade silver gold mine. And you know, lastly, they bought Garrett Canyon. I just visited a couple of weeks ago, actually, and that's a gold producer. You know, the margins are better. And now First Majestic's balance sheet, you know, they've got hundreds of millions of dollars. They're able to provide development CapEx to keep the operations running smoothly. They're able to pay dividend, which they just started to do, and they're able to buy back shares. So, you know, free cash flow is the lifeblood of the company, and you know, higher margins allow these companies, silver companies, to do that. But you know, if you look at the list, it's, you know, it's interesting because you think silver, you think core mining. Core mining is only 32% silver. You know, you think Hecla. Hecla is 54% silver. Yeah.
So if someone wanted to be invested in a pure silver mining company, it's really limited to, you know, Aya Gold and Silver. That one's the one in Morocco. Ben Wallace, we've had him on our channel. And
New Pacific.
Not a lot of blanks here on the line though. They're small and new, aren't they?
Yeah, New Pacific's in Bolivia. I've been covering them for a few years. I'm the analyst that broke this story like a year and a half ago about their, you know, it was close to 200 million ounces of silver. It's pure silver. They were getting drill results of 130 meters of like 120 grams a ton. It's one of the most impressive projects I've ever seen. I hope to go down there soon. And they have a good relationship with the Bolivian government, and they're going to provide a lot of economic stimulus and jobs to, you know, the whole country. And you know, the new leadership is pretty high on New Pacific. So yeah, but you know, New Pacific's 100% silver. That's very rare to find a 100% silver project. That's an anomaly. Most silver projects are like you know, high grade epithermal, which means they're narrow vein, which means they contain a little bit of gold, a little bit of base metals. As you go deeper into the source, the base metals get, you know, higher increase in grade. So that's the typical, you know, silver sort of deposit, you know, the epithermal stuff.
Now that's because silver is actually a lighter element, right? So it's closer to the surface.
I think
Is
so.
that why why as you get deeper, the silver gets lighter and gets
I think
lesser
so.
in content, and base metals become
It precipitates out,
Yeah.
so, a little bit lighter. So it's up top there in the systems.
Gotcha. So, you told us you'd give our audience one or two picks here. Give us what you think are the best two stocks right now today that we should be looking at.
Let me talk about valuation for a little bit.
Okay.
It's like a seesaw. It's like one of those scales. It's between enterprise value of the company, which is, market cap minus cash plus debt. That's enterprise value versus free cash flow, like what you get from your operations. Like if you had a lot of money and you want to go buy a company, what are you looking for? You're looking to pay the littlest price possible for the most free cash flow that you possibly can. So, the fact that, one operation is 100% silver versus an operation is only 30% silver, that doesn't necessarily, mean a tremendous amount. It's important data, but you can't base a valuation decision upon it. You got to look at enterprise value, what the market values it at versus free cash flow, because free cash flow are profits. That's the money you can take out of the business. So, that's what my whole, track record is based on, up 400% over the past, through 2015 to 2020, up average 30% a year based on this relationship. We're value investors. We invest in the value silver miners. One of the companies right now that I've been covering for a while is Fortuna Silver Mines. Fortuna Silver Mines in 2021 could generate $235 million of free cash flow from its operations. This is before corporate overhead. This is before anything. It ran into a tough patch a couple of years ago because they got involved with Lindero in Argentina. Argentina has been a basket case. It's not a good jurisdiction to operate. But they have Lindero in production that's generating cash. It is a gold mine, and then they rolled in a rocks gold, which is in West Africa for Segula and Yaramoko, which are gold operations. But basically, you're buying, you're only paying 8 times free cash flow to purchase Fortuna Silver. And Fortuna fair value for all the miners, it's like 2x or 3x higher. So, it's a true value story. And,
after they made that play for the African mine, didn't it, if I recall, I'm just going from memory, the stock really took a dive, correct?
It got hit.
You think it was unfairly taking a hit for that move?
Well, I do, based on my analysis, because, you got to look at the cash flows. There's 2 ways to grow in this business. Either it's accretive growth or it's dilutive growth. Dilutive growth is horrible. And to be honest with you, if you look at a chart, check it out. You look at a chart of core mining back in 1990, split adjusted, it was at over $300 a share. Now it's at 5 or 6. It was just, it's like a triple leverage ETF suffering from beta decay because they dilute. You need to look at all these metrics on a per share basis, because increasing revenue, increasing profits, you need to look at it on a per share basis, because you need to figure out whether they're actually adding accretive growth or dilutive growth to their balance sheet. The market didn't love their acquisition of Rocks Gold because they're moving from the frying pan into the fire with West Africa. But the price they paid, they're going to get Yaramoko, which is generated about 120,000 ounces a year. They got Segula, I think it's about 120,000 ounces a year for minimal capex, like 100 mil. They're going to pay for that out of their balance sheet. It should suffer no dilution. I think it was an accretive transaction. Some of the analysts disagree with me, but we'll see.
So they picked up a really cheap mine because it's in West Africa. Probably it was at a huge discount.
Yeah.
But you think that the risk is manageable, and they didn't put out a lot of, they're not putting out a lot for this asset. So there's mostly just upside here. No downside.
The number one thing that determines a successful investment, I think this is from Warren Buffett, is the price you pay for an asset. If you pay the lowest price possible for an asset. And if you look at Randgold, that Mark Bristow, CEO of Barrick right now, Mark Bristow ran Randgold for 10 years. That was one of the best gold stocks of all time. He ran that company accretively. He was heavily involved in Africa, in the Congo, in places you never want to step foot in before. And he made it work because he treated all people involved as equals, as stakeholders, whether it be the government, the workers, whatever. Everyone got paid equally, and he made it work. So, it's not impossible. And it does come down to the price you pay for an asset. You get a lot of companies in this space that pay billions for assets. They never get their money back. Like, if you buy a business, like you pay $1 billion, you expect to get $1 billion back from it. But a lot of these miners over the past few years prior, they didn't care. They were growing their production from, say, 3 million ounces to 6 million ounces, and they didn't care how they did it, whether it was accretive or dilutive. And
they just wanted revenue. They just wanted the top line, big number. They didn't care about.
Yeah. And, me, I'm a finance guy. I got my spreadsheets, I got my calculators, I'm a CFA. I add up the numbers. I'm like looking at some of the numbers of the acquisitions. I'm like, you're never going to get your money back. This is the most ridiculous thing I've ever seen. I've never seen an industry like it. But over the past few years, they've found their way. They're operating more like businesses. They're paring back on profitable assets. They're focused on profitability. They're buying shares back. They're issuing dividends. They're doing the right things in the industry.
So of the other ones on here, let me see. I'm going to ask you which ones I own and get your opinion. I'm going to pick your brain here. What do you think of Silvercorp metals? Because I just bought some of that.
Yeah.
And I thought that one was insanely cheap.
Yes. Yes. It suffers from the China stigma. Roy Fang, the CEO of Silvercorp. We like Silvercorp because it got really cheap. There was Carson Block, the short seller. They launched a short attack against Silvercorp. They thought it was one of these, fraudulent shell Chinese companies, and the stock got hammered. And then I picked it up for Silver Stock Analyst, and we did great. We made a couple 100% with Silvercorp because we bought it up at a tremendous discount. But in reality, it suffers from the Chinese stigma. In reality, it's one of the best run silver companies in the whole space. They make profit, good amounts of like 10, 20 million every single quarter. They buy back shares every quarter. They pay dividends every quarter. If you look at the stock deals that guy's done, he basically picked up New Pacific for pennies. He's the guy that launched New Pacific. He's got 3 or 4 more things on his balance sheet that he paid nothing for. As far as a accretive to a CEO that generates accretive shareholder value, Roy does a great job.
Well, with Silvercorp, I looked at it really close because I was talking with Lon Shaver. I interviewed him once.
Yeah.
And we walked through it. It's got a market cap of like $650 or $700 million.
Yeah. And
they're sitting on 200 something million in cash.
Yeah.
0 debt.
Yeah.
Their investments in all those other companies like New Pacific are at another 240 million just sitting there within their market cap.
Yep.
So there's 6 million ounces, 6.5 million ounces of silver production is only being valued at about $200 million.
Yep. Yeah.
I mean, once you manage out their cash and their investments in other companies, it's Silvercorp metals just look like that's batshit crazy that it's so cheap.
Yeah. I got the numbers right here. Market cap 726. You subtract the cash and investments to back in the enterprise value. That's 200 mil. It's trading at enterprise value of 500 mil. So its free cash flow to enterprise value it's trading at 3.3x. The average miner trades at 12.3x. So it's undervalued by 75%. The problem is it's always been undervalued by 75%. Like, what's going to be the catalyst to, drive it forward? I don't know. Like I said, they own a lot in the New Pacific. Maybe they'll get involved with New Pacific. Maybe they'll, distribute.
Diversify out of China, maybe, so that it's
Yeah, exactly.
You think there's a China discount associated with the ounces of production?
or dividend the shares out that they own of New Pacific and the other companies out to shareholders. So you want to share a Silvercorp, then you'll get a share dividend of New Pacific and the other ones too, to create value. So or that or diversification.
Anything else on the list that you want to mention here that jumps out at you?
I don't know. It's an interesting time in the silver industry because silver production has been stagnant and it's going down a little bit over the next few years. Whereas you get silver demand that keeps picking up. It's technology. It's solar. Solar panels use 70% of an ounce of silver goes into each silver panel. You get the the electronic vehicles, all the Teslas, all the batteries. We're just using more and more and more silver, and then you throw the investment demand on top of it, and the silver industry has been running at a surplus for a decade here. And then, the silver miners are producing less and less silver per year, but there's a couple projects right now that are coming on stream in late 2021, 2022 that, I've got a close eye on, including Silvercrest Metals. Silvercrest Metals could have the highest grade project. They do have the highest grade silver project in the entire world. That one's going to start production next year. It's got a grade of, I don't know, like about 700 grams a ton silver equivalent. And I look at grade really closely because grade has the highest correlation with cost. You got high grade, you got more silver in each ton. So it costs the same amount of ton, but you get more silver out of it, so your costs are less. Yeah. So companies like Aya, which is crazy high grades, and Silvercrest, they're going to have extremely low costs. Mag Silver is another one that started production too. That's a monster deposit down in Fresnillo, Mexico. It's like 1 billion ounces of silver. They're running it with their partner Fresnillo. They own 44% of it. It's run by like a royalty company. That grade is like 800 grams a ton. So even if silver, say, I don't think silver is going to, who knows? Say silver goes lower, these companies are still profitable. They're going to be fine. But you get some of the other smaller guys that, they're scraping along. They barely make any money quarter to quarter. If silver prices go lower, some of these other companies are going to have trouble. But so what I'm saying is, look at grade's the most highly correlated thing to cost. Cost is the most highly correlated thing to profitability. And then it becomes a balance between enterprise value and free cash flow where you're going to get.
This is a chart I got from SRS Rocco, and Joe's basically showing global silver annual mine supply. And 2020 was probably a bit on the low side because of COVID's shutdowns. So maybe not. If COVID had not happened, that number might have been, in the low 800s. But you can see this trend was already in place back since 2015, 2016.
Right.
And you say there's a few new projects coming online, but at the same time, a lot of the big mines are being depleted. So the question becomes, are we really replacing the big mines that we found in the 70s that are now nearing end of life? Or are these new projects coming online generally smaller, lower ore quality, and this trend is likely to continue?
Yeah, I tell you what, the companies that I cover that are like pure silver producers, they're producing about 300 to 400 million of that, say 899 million ounces. The silver companies that, Hecla, First Majestic, Core, they're producing about 400 mil of that. The other 400 mil to 500 mil, that's coming from the big boys. That's coming from Phelps Dodge. That's coming from Freeport. That's coming from that Polska company, because they're mining big copper projects that are high grade copper with low, like 6 grams a ton silver, and the silver is a byproduct. So they sell it for whatever. They, don't even look at it. That's where the majority of the silver production comes from, and that's why Keith talked to some of the CEOs, and these big guys, they're producing half the silver. They don't care because they're making 5% of their revenue from silver, the other 95% from copper. So they're just basically dumping it on the market. So it's an interesting industry.
Yeah, so those guys are never going to hold back a couple million ounces like Keith does, because it's just it's a rounding error to them. They don't care.
Yeah, they don't care.
And I, from what the latest data I saw is, the primary silver, the guys who really focus on silver, they're only 27% of the market now. 73% of the market is, byproduct guys, got miners of lead, zinc, copper, what you just described.
Yeah.
But then what the other question becomes, will some of these miners just start selling direct to industry and not go through the bank system? Like one of the ones I follow is Guanajuato Silver with James Anderson.
Yeah.
And they just went into production this past week. And they signed a deal where they're selling to a company they sell all their concentrate to Ocean Partners. And I remember talking with him. One of the companies that bid on their production was Samsung.
Yeah.
So literally, there are these alternatives out there where these companies are selling direct to industry and skipping the whole bullion bank COMEX system, correct?
Yeah, Avino does that too. Avino's got a big contract with Samsung, so they're selling it, straight to, the manufacturer. And yes, it would be nice if the silver industry did have another outlet to, offload their silver to.
Well, anyways, Garrett, we really want to thank you for joining us and sharing your knowledge, your expertise with our audience. We talk a lot about physical silver and the big macro picture, but actually digging into some stocks. I know about 70% of our audience also is into the mining stocks. So
yeah,
I'm sure they'll appreciate your knowledge. And let's do it again, like every 2 or 3 months.
Let me so I've been in the industry 10 years. I've seen the ups, I see the downs. I follow sentiment really closely. There's a few indicators that I follow. I follow the COMEX managed money for silver. And, right now that is basically back at zero. And it's at below 1.5 standard deviations, which means that only 10 or 15% of the time it gets lower than this. You look at the DSI, the daily sentiment index for silver, it's the same thing. It's 1.5 to 2 standard deviations below normal. You look at the number of silver stocks that are above their 200-day moving average, which is zero a couple days ago. We've seen things that we haven't seen in 5 to 10 years. So, the silver industry, it's a cyclical industry. There's good times to get in. There's not so good times to get in. All the indicators, it's a good time to get in right here. And then, you look at the writing on the wall. You go shopping, the inflation is through the roof. Negative real interest rates are dropping even more negative because inflation's picking up higher. It's going to be a great time to own silver. It's going to be a great time to own gold. And when silver gets rolling, these silver miners go on a tear. They go up 5x, 10x, 50x.
If silver, just to put that in perspective for our audience, if silver were to just hypothetically double to let's say 50, what would you expect the average silver? All the miners are leveraged to silver.
Yeah,
the torque is insane for some of them. What would you expect the average? A 100% increase in silver would equal what? Would you expect most of these miners to triple, quintuple? What would you expect the average to be?
Yeah, right now the average one's trading at about 12 times free cash flow. As their margins improve, then the share price improves, the multiple goes down a little bit. And then another thing, if you look at these silver companies and the gold companies, they trade on their margins. And what happens is when the price of silver goes up, the price of gold goes up, sometimes their costs go up too. So, the margins are steady, but they need increase in margin. And if the price of silver basically went up a tremendous amount, their margins are going to increase a tremendous amount. So yeah, it depends on which stage of the market, whether they're an explorer or a developer or a producer. But yeah, it's, easy 3x to 5x on the
well, it also depends, like what you said, it depends on why the price of silver goes up. If it goes up because of monetary inflation reasons, you're right. Their costs go up also proportionally. So they might not have margin improvement. But if they were to go, if prices of silver were to go up for shortage reasons, then, and without their costs going up, that's an entirely different calculation in terms of profits.
I agree. And, we've been in the industry for a while here, and we've all been waiting and for, silver to go on a tear. And to be honest with you, it's been frustrating because inflation is significant this year, and silver and gold really haven't done anything. But, they've been around for thousands of years. They're going to do what they've done protect investors from, inflation. And we're in an inflation period now. Gold and silver are going to do great over the next few years. And the silver and gold miners are going to do even better because they're leveraged to it.
Well, Garrett, thank you very much. We really appreciate your time. And let's do it again in 2 or 3 months.
Good. Sounds good. Thanks, Jim. Thanks, Ivan.
Take care, everyone.
Nice to talk.